All right, today we're diving into a really fascinating story about a company called Sakar Healthcare. You see, they're making a massive bet, pivoting their entire business in a move that's super high stakes. It could be a total game changer, or it could go sideways. So let's break it down.
You know what? Let's just cut right to the chase. This is the final verdict from the analysis. It calls Sakar at Tear a rare combination set up for long-term compounding. Now, for investors, that's kind of the holy grail, right? Where your returns start making their own returns? It's a really bold claim. So the question is, what's backing this up?
So, here's how we're going to tackle this. We're going to unpack this whole idea, piece by piece. First, we'll look at what the company actually does, its solid foundation. Then, we'll check out its growth, which is pretty impressive. And finally, we'll get to the main event, this huge pivot that could totally reshape its future. Let's get into it.
Okay, before we can talk about where Sakar is going, we really need to get a grip on where it is right now. So, what is this core business? What's the foundation they're building on?
Well, at its core, Sakar is a pharmaceutical company based in India. But they don't just do one thing. They've got a pretty diversified setup, which means they're involved in the whole chain, from coming up with new drugs to actually making them and then shipping them out all over the world.
So, let's follow the money. A huge chunk of their revenue, about 70%, comes from exporting their own branded products. The other 30% comes from something called their CDMO business, and that acronym is actually super important for understanding their stability. So, what on earth is a CDMO?
It's a big industry term, but the idea is simple. A CDMO is basically a pharma for pharma company. Other drug companies hire them to handle the nitty-gritty of development and manufacturing. For Sakar, this means a nice, stable, recurring stream of revenue, while their own brands are where the big growth comes from.
And these are the pillars holding that business up. They're in over 60 countries, have a massive portfolio of products, and their facilities are top-notch. But that last point, that's the real kicker. Client relationships that last over a decade. In the pharma world, that kind of trust is like gold. It's incredibly valuable.
So, the foundation looks really solid, but, has it actually been successful? Let's switch gears and look at the numbers to see how this all translates into actual financial performance.
And wow, this table tells a pretty clear story. Just look at the 4 years between 2018 and 2022. Revenue more than doubled. And even more impressive, their profit after tax, that's their bottom line profit, it nearly quadrupled. And they did all this while keeping their profitability margins super healthy. That's not easy to do.
To put a finer point on that growth, we're talking about a compound annual growth rate of about 25% for their revenue. That's just incredibly consistent, strong growth year in and year out.
But this is where it gets even crazier. Their profits grew even faster at 36% per year. So this tells you the company isn't just getting bigger, it's getting smarter and more profitable as it scales. Now, with a business this good, why would you ever change a thing?
And this, right here, is where the story takes a huge turn. See, Sakar isn't satisfied with this success. They're making a massive strategic bet on a totally new, high-stakes future, the world of cancer drugs, or oncology.
And look, this isn't just some small side project. They're building an entirely new part of their business dedicated to oncology. And notice that term vertically integrated. That's key. It means they want to control the whole process, from the basic chemical ingredients all the way to the finished medicine.
So why? Why risk a good thing for this pivot? Well, it boils down to two things, money and protection. The profit margins in oncology are expected to be double what they make now. And the barriers to entry? They're incredibly high because of the complex science involved. This isn't a playground just anyone can jump into.
So the potential advantages are just massive. We're talking higher returns on their investment, the power to set their own prices, total control of their supply chain, and way fewer competitors. Each one of these things helps build a deep, protective moat around their business for the long run.
And you have to understand, this isn't just some dream on a PowerPoint slide. They are deep into this already. Get this, they've already developed 55 molecules. 32 of those are ready to go. The new factories are being built as we speak. The goal? Start selling these new drugs by 2026. This is happening.
Which of course brings us to the final part of this story, the classic investor's dilemma. The potential reward here is absolutely huge, but you better believe the risks are too. We have to ask the tough question. When you have an ambition this big, what could possibly go wrong?
Well, the hurdles are pretty significant. First, there's just pure execution risk. Can they actually pull it off? Then you've got regulatory approvals in dozens of countries, which is never a sure thing. Can they get production ramped up without a hitch? And, maybe most importantly, all of this costs a ton of money, which is going to burn through cash for a while.
So this is the core conflict, right? On one hand, you have the proven present, a stable, predictable, profitable business that's already growing like crazy. On the other hand, you have this high-potential future, an ambitious, exciting new platform that comes with a ton of risk but could completely change the company's value. And that leaves us with the ultimate question for any investor. What do you value more? The certainty of a proven business that's already winning, or do you bet on a high-risk, high-reward transformation that could create incredible value or, fail spectacularly? Sakar's making its bet. The only question now is whether it's going to pay off.